Okay, good morning, traders, and welcome to this live intraday strategy webinar. Today is Tuesday, April 7th, and I'm Michael Boutros. Good to be with you guys this morning. Packed house, Eman, Gary, Jay, Kelly, Mike, Pete, Peter, Rizwan, Sarab, Ted, Ziad. Great to see everyone here in the room. Hey, Aurelian, great to see you as well. Hello, thank God I'm not going to miss your webinar today, says Eman. Great to see you, Eman. Mike, same to you, sir. Pete, we'll definitely look at the SPX. I threw you some levels there. I think you got a little bit more upside to go. We've broken that key pivot we were looking at, so we'll take a look at those levels today. Good morning to everyone in the room. Things are on the move. On the menu for today, we got the DXY, Euro, Dollar CAD, Gold, SPX, Aussie, Dollar Yen, and Dollar Swiss. Obviously, with Aussie, we got the RBA last night holding interest rates at 0.25%. Little bit, let me say it's not as gloomy as you thought they would come out. So you're seeing Aussie with a nice little topside pop there, taking us through downtrend resistance, and we'll look at those levels as well. All right, let's jump right in. So here was our last update on DXY, and this is what we look like into the close of last week. A major level that we were looking on the upside was 100, spot 59, spot 63. Nice confluence, 50% retracement, 100% extension. Didn't even get that high. Here it is on the intraday chart. Right, we got right through that, and that sat as support, and then broke through. We never hit the 101.19. So nice little downside move. Looks like we're making it through near-term uptrend resistance. First target 99.91. Looking at a 2019 high. Okay, the high that we made was 99.67. So that's the next downside target on this immediate advance. Just take a quick look where we were on DXY in the weekly chart. We've been talking about this, like, what was that? Was that a breach of this slope? Or was that just a simple break, false break of resistance, uptrend resistance, and look for the correction? If we close below this slope this week, sub 99.91, it would be encouraging. This is the weekly chart, right? For at least a little bit more of sideways to lower price action. On the daily chart, a little bit less clear. Not really liking this chart because there's not much to really pay attention to here. You're essentially looking to see if this slope has any merits whatsoever, guys. And the only thing I want to highlight here is monthly open support takes it down into like 99.01, 99.17 is the high day close from last year. So not much to look at here. The only other thing I wanted to highlight is this upslope that we were following from the 2016 lows, or 2017, 2018 lows rather, right? Look at the upper parallel. One touch. We sailed through on both sides, but that one failed just ahead of that turn again. So it kind of has me looking lower against 101.19, which was the idea. It didn't quite get that high, but that's where right ahead of where we failed. Here's what it looks like. Okay, and here's what it looked like last week. So we came into this region a little bit later, popped through it, sat right there for a while, popped below, now testing that 2019 high, just lower at 99.67. Near-term resistance now right back at 100 spot 60/63 right here. Do keep in mind that now that it also represents the objective weekly open. So again, love when you have those levels lined up, and then you also get a monthly open or close, a weekly open or close, a high day or low day close. So I like 100 spot 60 as sort of the ceiling. Downside 99.67. The big pivot would be 99.17, 99.30 right here. 2019 high day close, 618 retracement of the near term advance. Really nice pivot in price. Just look back with my cursor here, right? So that's sort of what would validate a larger turn in my eyes for DXY in the downside. Obviously, 60% of this index is euro, so we'll take a look at that. Gary says, "Hey, Michael, great to be back. Great to have you back, Gary. Looking forward to your abomination views. It's on the list, my friend." Believe it or not, Gary, we've actually been watching dollar yen closely for the last couple of weeks. Gary, a former subscriber here, is back with us again. Good to see you there. So any questions on DXY? If not, I want to jump into some of the more operable trades that we're in or getting involved in. Here's euro, okay, and here's what euro looked like earlier I guess it was last night. All right. First things first, I showed you this yesterday. If you're with me on the Daily FX webinars, by the way, is anyone here having issues accessing the Daily FX webinars? I got an email from you, man. Thanks for that. I got an email from Dorian saying that they were having issues. I've escalated that to them. So good thing we don't have any issues here. So we're always on top of our game. At the end of the day, we went over this yesterday, but the main focus was, again, for the weekly, very similar to the DXY on this slope. Here's Euro on this slope. So like, we closed the weekly close below it. We jackknifed higher right off that level into the close of March. Here we are still holding that key range. So unfortunately, all things held constant, we're still in a massive range for Euro. That being said, we've been looking for the long side. We've been looking for the rebound. And this was the key support zone that we were looking at. So 107.25, 107.75, big zone on the weekly chart. This is what we're rebounding off of now. I know we've sailed through it so many times, but 109.67 still a pivot. Okay, no matter how you slice it, even when you dig down into price action, we've been seeing decent pivots on that level. So on a weekly standpoint, look for a pivot there. Again, largely still in a range. Pete saying yes. Okay, so Pete, you had that problem as well. Michael saying, yeah, last webinar I couldn't get in either. Okay. All right, thanks for letting me know, guys. Euro on the daily. Here's the daily chart. So again, similar to the DXY, doesn't really leave much here to get excited about. However, you see the reversal off that 107.77 level. Here's the rebound taking us through the 2019 close. Basically looking for upside stretch. Next major upside target's 109.76 would be the low we closed from last year, and then the monthly open. Let me move that down to here. Okay, here's the juicy stuff. Here's the intraday chart. So heading into last night, looked like it was making a topside breach of this, or it looked like it wanted to. The weekly opening range was set right here, just below slope resistance, just below Fibonacci resistance, just below that 108.21 level. Here's the break in overnight trade. First upside level, 109, 108.97. And I told you guys that's near term bearish invalidation. So a break above 108.97 would essentially, in my mind, put this on a more, would validate the breakout, would validate the near-term reversal. So we're trading above that now. We want to see how it close. The only thing that has been added here from last night that wasn't on there is the fresh retracement. Now that we know this is a more concerted low, tack on a quick retracement. 38.2 comes in at 109.13. Again, next upside target hasn't changed, still 109.76. Just above that into 110 is where you get the 618. Near-term support back at 108.21. Bullish inval is right at the weekly opening range lows, last week's lows, that same old level, 107.77. Okay, so if you buckle back below 107.77, forget about this. You're probably going to see a test of the low day close, probably going to see a test into the 106s, to be honest with you. This is a big zone for Euro. So it's make or break while above 108.20. Let's see if this sucker can hold. Gary says, man, that chart looks so tight. I just haven't seen it in a while, Gary. Our charts, our charts. It's all about the levels, guys. So again, don't chase in this market. It's very easy to get caught up on this rally, specifically in stocks. We'll look at this SPX rally in a moment, but don't chase, guys. Make sure we're still staying disciplined. Every trade on its own merits. So that's Euro and DXY. Any questions on either of those? Could get some pullback here into the open, but generally speaking, looking for support ahead of that 108.20 level. Dollar CAD, number 3. So we went over this also in the webinar yesterday. We talked about the fact that we were in a near-term consolidation. It looks like it's resolving lower, but there's a little bit more on that trade to give us some conviction, I think. And one of the things, did I highlight this? forgot to note yesterday, but we did have, which is one of the reasons I put that out there. I'm surprised I forgot to write it down. We did have an outside day reversal, right? Now, let me take a step back. The thing I wanted to highlight about this yesterday is that essentially the monthly initial opening range, here's your monthly open. We ripped into a high and we've been trading in that range ever since. So essentially you're looking for a break below that 140.58 level or a breach above the high week close, right? 133.36, we were talking about that level for a while. That was our bearish invalidation. So we were ranging here. Yesterday, you posted an outside day reversal, taking out the previous session's highs, taking out the previous session's lows, which is a bearish typical formation. Not in and of itself enough to kind of put you in a trade. But then when we took a look at that consolidation pattern, here was the break, right? Here's what we looked like yesterday. Now resistance at 42.25. You guys know I've been loving the dollar CAD short, but the problem is that every time we've tried to make a topside rally, the downside's been pretty quick, right? We rally, downside's pretty quick. So we resolved, let's look for a break of this. Ultimately, these would have been short targets for us to try to jump in. And that's the other reason I told you I didn't really like the upside, because the targets are just stacked so close. High we close, 618, 100%. I mean, it's all right there. So looks like we're resolving to the downside. The real test is right here. If we can make it below 40.14, I think we're on our way for a bigger setback in dollar CAD. Downside targets, if we do get the continuation, 37.93 into 38.12 would be your first sort of level. I didn't, I want to stress this, but here's your late March low, 139.20. But this is the bigger zone in my estimation, based on the pivots that we've seen in price around this zone. And then a 1618 off the high would take you down into 37.19. Right now, it's just about these two targets, okay? Bearish invalidation, same level. Objective monthly open takes you 42.25. Still going to leave that up there. And this 100 is now null and void, or it will be once this low is taken out. Oop. There you go. Sort of minor target, major target, minor target, bearish invalidation. Now I'm really mindful that this is dollar CAD and it's been doing these false starts of a break and false rip for weeks. It's very frustrating. So trade nimble, stay light. Again, in this market environment, guys, you all should be lowering your leverage anyway. But yeah, I mean, as long as if it rallies, as long as we can fail like ahead of 141 or at 141, I'd like to see this push lower. I'd like to see this push lower. Now, a lot of people are going to point again, yeah, justifiably so to a degree, and we've talked about it here in the webinar as well, to the massive drops that we've seen in crude prices. And while crude price has been on sort of a free fall, remember the weekly chart that we've been following is all really I've been looking at. It had us at a major slope support last month. Basically this region here, we looked at it for a while. Last week was a massive outside weekly reversal off of fresh multi-year lows. Long sentence, significant factors, okay? Does give us a little bit of a floor well above 2180 in my estimation. Again, that's the low close. Big resistance, the first major hurdle is this dollar range between 29.07 and 30.19. That's the first hurdle to get through. 2016 low week close and a basic 236 of this year's massive, like what, 70% range or something. So yeah, keep an eye on this. My point with showing you this chart is that not all is lost. Crude is not going straight to $3 and hell in a handbasket. So yeah, there's going to be gyrations. I don't want to use that to discredit any dollar CAD trades per se as it stands right now. Looking for a reaction here. Quick note to anyone who's involved in this: if the U.S. markets come online, 9:30, 10 o'clock, you start to see recovery. And specifically, if European markets close and we're back above the April open, this would just be a false break scenario. I would just discount it completely like we did back here, and I'd be planning for a little bit more of a recovery. So the fake out scenario is very real, especially in this and dollar yen, both of them. Keep a close eye. Questions on dollar CAD. Again, a reminder, I see a lot of new names. If you want to take a snapshot of any of these charts, there's a camera button somewhere on your GoToWebinar screen. Go ahead and click on that, and you can just do a save for to reference this chart later in the trading week. It's the same levels though, for the most part, from last night's update. That's dollar CAD. Should we segue? Let's segue a little bit. A lot of interest in gold and SPX. Let's hit gold first. Here's number 4, and here's what gold looks like. So, man, it's clean. We didn't get a bigger setback. We were looking for longs on a deeper cutback, but the longer picture has still been constructive since the breakout. So 1643 got taken out. Here's the next level. We turned just ahead of it yesterday. It's the high day close at 1678. No surprise here. Initial support, like we noted last night, 1643. That's basically what we bottomed at. Now it converges. So you shuffle over the highlighted region. Someone was asking yesterday in the webinar. I don't have time to really get into detail on daily effects. There's so many people in there, but about the circles. So yeah, they're going to highlight levels that we're looking for significance, and specifically when you see convergence levels, such as here, we have the median line converging on a former swing high, Fibonacci retracement, the works, gives you a little bit more. Puts a little bit more conviction on the level. Look for a little bit bigger reaction here. So top side level still unchanged, 1678. I'd be looking for a reaction there. I think that's the breach and close you need to fuel the next leg. So I'm cautiously looking for a near-term exhaustion high here in gold. Levels of interest, you're still constructive above the weekly open. I'll kick that out and slope here. Broader bullish inval still at 1585, no change there. Top side level, if we breach, you're looking at 1678 and above. Here's gold on the daily chart. Objective lateral levels, right? Here's your high day close for the year. There's that 764 we just missed back in March. Here's gold on the weekly. I'm going backwards here, guys, but I just want to show you all these charts. They're just phenomenal. Look at this. High close, 1674. That got tapped today. Okay, that got tapped today. The other thing I want to note is this level right here. This is the 75% line, okay, of the pitchfork we've been following off 2013, 2015. Also, right there on a closed basis. Pretty pinpoint intra-week. That's where we capped out. All right, so there's a lot to suggest. Again, the broader picture remains constructive. No one's arguing that, but you can't just stay bullish indefinitely. It's been a 3-week massive range. Actually, if you count the 4th week low here, you're looking at a rally. This thing is very finicky sometimes. Looking at a rally of about 15% in just 3 weeks, right? So yeah, I love the long side. I think right here you just want to be cautious. There's not much follow through 1673, 1677, right? And it's still testing 1655, 1650. I don't have anything, E-man, at 1655, 1650. What do you have there? On the upside, it's 1678 for me. Near-term support right now is 1643. Don't necessarily have a 1650 level. Let me know if you're looking at a pivot or something there. But right now, this is the immediate range. Now, ideal scenario, you get some push through and failure early in the session here before a larger drawback. If you don't get that and you just get the buckle below 1643, look for possible exhaustion near that lower parallel. Objective weekly open support. Again, your bullish inval rather is still down at 1585. E-Man, does that make sense? All right, that is okay. SPX. E-Man says, "Yep, Michael, thank you. Hey, you're more than welcome. Yeah, keep an eye on this one. I think there's a little fake out here before we turn higher again. SPX. Pete, here's what I'm looking at, man. So Pete was asking your thoughts on this. We've made a couple of adjustments over time to the slope. I was using this low right into the open or last week. We started to dribble below this. We took it out to the swing earlier this week, and it kind of held the low more or less. Here's the main level that we were looking at. Even on the initial stretch, when we were trading higher, we were looking for the 38.2 retracement. We were looking for the 2018 objective yearly open. That's 2646/71. Tagged it here, just missed it on this stretch higher into the close of March. On the pullback, that former pivot zone as resistance didn't really give us much. It was very fake out type of play. We kind of pivoted and held that zone for a while. Here's the breach. April open, support yesterday. This is where we were. This is where we were when we published last night's update. And I was saying this is the make or break level. It's right here. Support, April open, bullish inval, 1521. If we breach, you're looking for the median line. I think I noted 2720s, 2710s, backed by 2789, which is the next upside target. And that's the target I told you earlier, Pete, before the webinar. I think that's where you want to take stock, at least on this advance. It's a basic 50, so it's not a true fib per se. But a decent level to look for some sort of reaction. The October low comes in at 28.55. A lot of people are asking, is this the resumption? Are stocks done with the coronavirus sort of panic sell-off? We're kind of seeing through the fog a little bit. Possibly. I do think, again, Pete, because of the breach of this pivot zone, there may be a little bit more upside to go. You're in overbought territory on the intraday momentum, which is not something to necessarily jump into a new trade, but it's not necessarily something that wants to take you out of the longs just yet if you're holding them. One thing I want to also consider is a basic objective extension off the high here. You got a 1, 2, 3. Look where the 618 is, but my problem is look where the 100 comes in. Way up there, like 28.94. My point, Pete, is that even if this whole move is a corrective move within the confines of a larger sort of turn down, there's still room for a larger recovery here before you even start to think, okay, well, a low is in. So look, for now, 26.46 is going to be your level of support. You're constructive above that in the immediate front. Bullish invalidation. Yesterday we had at 25.21, last night's update. You want to bring that up to the objective monthly open. If we get below that, after breaking the initial monthly opening range highs, I'd start to think you're looking back for a deeper cut. All things held constant, 27.89, 28.55 are your next upside targets on the SPOOS rally here. Questions on this, Pete? You know, there's a couple of different ways you can also work this slope. If you take the extremes in price, kind of gives you a little bit deader of a gradient, lines up with these highs. I was looking at this yesterday. So whatever slope you're working with, at the end of the day, the major levels are still the same ones being highlighted. So SPOOS might have some more relief on this sort of recovery before all is said and done. By the way, here's what SPX looks like on the weekly chart. Again, we take a look at this in log scale. You know, we've made it through a lot of downtrend resistance and former uptrend support slopes. So wouldn't be outside the realm of possibility to see more upside on this before we're done. Make sense? Eman said, Peter says, thank you. You're more than welcome, Pete. More than welcome. It did look, last time I spoke to you, I think it did look like it was about to break this upslope. Market had a different thing planned. SPX, that's number 5. Number 6, let's jump back into a couple of FX pairs. Here's Aussie. Again, RBA last night came out with no change, leaving rates at 0.25%. Here's the downslope that we were considering. Remember, looking for basing, right? I was looking for a lot of these trades that we were looking for sort of entries on a deeper cut. We didn't get the deeper cut, but the bias was correct. Here's what it looked like earlier in the week. So right into the open, we were considering this downslope. I had this figured like 6 different ways, guys. Basic idea was to look for a breach above 61.19, specifically 61.80, which is where we failed sort of around last week for validation of the breakout. So 59.44 and the level of interest was a basic 38.2. Again, you didn't quite get that drawdown. It just opened the week. Whoops. It just opened the week and started ripping. So there's the initial 61.19 target that held for a little bit. There's the breach overnight 61.81, and here's the 618 at 62.35. If we breach that, you'd look for resumption of the broader breakout that we made in March, right? From that multi-week downtrend, we broke higher. This is the recovery, sort of the relief off that rally. If we get through 62.35, I think you look for a lot. The next upside stretch. Now, I say that, but on the immediate stretch, look for reaction there. Look for action there. This is where I get concerned that if you're going to see failure on this, that's where it would be. You're looking at 2 different retracements here, by the way, guys. This is the yearly range, 618, okay? Or excuse me, this is off of the near-term decline, just from the March decline. And this 50 you're looking at is the entire yearly range. So both of those are like 62.35, 62.69 next upside targets. Oops. And let's clean this up a bit, shall we? Scratch this. Bear with me. I just want to see what this looks like. Watch this slope here. Here's your weekly open. That's near-term bullish inval. Ideally support into the slope if this slope has any merits, which is pretty close to those overnight lows in Asia, like 60, 70. Ideally, that's your support. Next upside targets. It looks like on the 60. Yeah, we'll work with that for now. Work with that now. Broadly constructive, but again, 62.35, 62.60 is just 30 pips higher. Look for exhaustion point there that could see a pullback. All right. Any questions on Aussie before we move off, or anything with the RBA? Nothing really hit me as being sort of stand out with that statement yesterday. So keep your eyes on price. Dollar yen. Gary, you're looking forward to the abomination? Well, here it comes. Here's dollar yen. And here's what dollar yen looked like a few days ago into the open of trade. Look, this pitchfork that we added on, the slope, we, again, didn't have too much conviction on it because it was too early in the game, but it highlighted levels of interest that we were watching anyway, namely that 107.68, just lower objective monthly open at 107.50, and then this key resistance point right here, looking for a pivot near 38.2 retracement. The objective yearly, this year's open at 108.62. So we opened at resistance. We wanted to see some sort of reaction. We needed to break below there to get bearish, or a dip into there to try to attempt a long side. Here's the breach. We just opened, broke right higher. Check this same zone as support. and you're setting up a weekly opening range just above. Here's your objective weekly open. Right? Choke that up to here. Levels unchanged. Levels unchanged. So as far as dollar yen, let me take a step back with this one. Here's dollar yen on the weekly chart, right? So the yearly opens have been sort of levels that we've been just playing through. The three major levels on the upside since the start of the year. Obviously, this year's open is not now, but 109.68 last year's open. Last year's high week close, right? 111.53. Both levels you saw decent pivots at. That was actually the failure point on a close basis. You know, whatever the hell this whole month was or last month seems like just a bad joke, right? Massive, massive range. We took out the entire 2019 range in this drop. So on this rally, you know, the risk for topside exhaustion as basically you're heading into that zone. Here's dollar yen on the daily. Here's your monthly open. We said monthly open was setting up right below resistance. Here's your topside breach. Above this, you still risk for the bigger jump towards 2019, 109.67. The upslope kind of confirms that, gives us that same objective bias in my mind. At the end of the day, weekly open support is now going to be near-term bullish in Val. No surprise to see the abomination doing abominatory things, but the levels are actually not that bad. They're pretty clean. Here's 60-minute. Oh, this is the 6-minute. Here's the 120. Questions on dollar yen number 7. And futures keep climbing, still up 827 on the Dow, 3.7% gain. Interesting. All right. Cheers. Best wishes to Jamie. Hey, Gary. Thank you, sir. Great to see you back in the room. Dollar Swiss. Here's what Swissy looks like. So last update on this one was last week. Here's what we were looking at with Swissy. The topside breach was testing 618 retracement at 97.50. We eyed the 786 at 98.16 as a level of interest because last week it converged on the upslope there. Here's that same upslope. Here's the breakout, right? The 618 held for a good couple of hours. We broke higher, didn't quite make it to the 786, and here's this week's open. Range right above slope support, break. Here's the downside move. You're looking for a move back into objective yearly open support that's 96.71. So isn't it interesting, guys? You look at dollar yen, you look at dollar Swiss, and despite massive record ranges, these things are hovering right next to the yearly open. So we did absolutely nothing so far over the last 3 months, even though fortunes were made and lost on this drop and bounce. So if you ever worry about missing an opportunity, just go back and look at this year, and the market will always provide, right? Looking for 96.71 near 2020 open. Again, if we get below, it made more sense yesterday because it kind of converged on former downslope resistance. But keep the focus on that low from last week, basically. If we get below this slope, this former upslope or downslope resistance, that would put me in the mindset of broader resumption, and we'd look for a new new slope off that high. But this is sort of my pivot, right? A couple of different ways you can also look at this. If you tack on a retracement like we did on the Euro turnaround, like we did on the DXY turnaround, the 38.2 comes in right here, just above. But look where the 618 comes in, 96.15. So that would be sort of your downside target on the break if you do get a validated move there. All right. Our unlikely friend, the Swissy. We've been all over this one too, Gary. You probably don't remember us covering this too often. But Swissy's been kind of clean. It's been kind of clean. Price action has been pretty impressive. All right, so that is number 8. For this one, 97.50 near-term resistance, bearish inval. Okay, on this break. Now is that 98.16 level that we were looking for on the stretch. All right, that's everything I had on my end. If you guys had any other questions or trade setups, feel free to throw them on the message board. If not, we'll go ahead and wrap things up here. Watch over the next couple of days. You get FOMC minutes released tomorrow. Don't think you're going to get much of a play off that. We've been getting a lot of commentary from FOMC officials anyway amid the entire COVID crisis, and don't really see it they'll get much. Could stand wrong. I don't know. Devil's in details with these minutes, quote unquote, releases. So look for that tomorrow. And we will pick things up back on Thursday morning to wrap up the week. Best of luck trading, guys. Cheers.